Hello, hello, hello. What's going on, everybody? Capital Hungry Private Chat, YouTube audience, how's everybody doing this morning? No, don't enter gold buys yet. If you didn't catch gold buys at 1812, now you have to wait until New York Open and a retest of 1812 or the break above 1820. But we're going to be talking about that in a second. I'm still in a bullish bias on gold, of course. But anyways, how's everybody doing here? Welcome to a Capital Hungry New York trading session. It is currently 7:50 a.m. Eastern, Wednesday, August 4th, just 10 minutes until New York market open. We're going to be running the stream for the next 2 hours past NYSE until around 10 a.m. Eastern, going into London close hours here. Okay? We're going to be doing some market analysis and trade ideas analysis on gold, GJ, GBP Usd, Euro USD, USD CAD, as well as US 30, looking at market sentiment and investor behavior, as well as any economic events we have and fundamental catalysts at play that we can use to our advantage. Okay, before we get into all that, let's just go through the nitty and gritty stuff. This is not financial advice, but ask questions about technicals, fundamentals, and overall markets. But please let me go through the process of giving analysis on the main pairs and currencies that we look at. Do not come here asking for direct signals or just spamming the chat. Any questions about the Capital Hungry private service, just go to capitalhungry.com, and all of your free resources are linked within the YouTube description, on the YouTube layout, and on the stream reminders right there, as well as I'm going to bring it up on your guys' screen here too, right behind it. Okay? So here you got the Capital Hungry News Twitter, Capital Hungry Telegram analysis channel, and obviously the Capital Hungry YouTube channel you guys are watching all these live streams and videos on, where you have hundreds and hundreds of videos. Okay, now, besides all the nitty and gritty stuff, for anybody that comes in later, the hyenas that come in an hour into New York trading session, and the 50 people that are going to come in later begging for trades and analysis, just let them know that all of these streams are always saved and recorded. They can always rewind the stream, watch it later, come here in the middle of the stream and rewind it to see where my analysis was on a certain pair or a trade idea we're looking for. But besides that, remember, all of us are manual retail traders who have emotions involved, different personalities, financial backgrounds that make all of our trading journeys and progress very unique, right? So with that in mind, always have a trading plan, follow your trading plan, follow your risk management plan, focus on your long-term vision and long-term goals rather than your short-term satisfactions and desires. And if you do this, you're going to have the highest probability of not crashing your account and at least staying profitable for a consistent period of time if we keep our emotions in check. Okay, so just that mental reminder for everybody here as a manual retail trader, just to stay smart. As per economic events, we've already had the UK PMI figures overnight. At 8:15, we have the US ADP non-farm employment change. This is not NFP. This is the private sector ADP non-employment change, which is still going to have a short-term impact on gold and the US dollar. But the main US economic data today is at 10 a.m. Eastern, which is the US ISM non-manufacturing PMI, obviously impacting US dollar, US equities, and gold. And the main US data this week is end of the week on Friday, which is the actual non-farm payrolls, the unemployment data, as well as the US wages data. Why is this in focus in terms of the economic events? Because what we have been focusing on is the continued stimulus and support of the central banks, and more importantly of the Federal Reserve, to the US economy. The Federal Reserve last FOMC statement previous week confirmed that they are going to keep stimulus support active for the US economy, which is in turn going to lead to short-term increases in inflation, keeping interest rates cut, as well as weakness in the US dollar. We're seeing some pullbacks in price setups for the new month of August, but overall, I'm still in a bullish bias on gold. I'm still in a bullish bias on GJ, GBP USD, Euro USD, bearish bias on USD CAD, bullish bias on the US stock market. What I'm just going to be zooming in to some key price points for us to enter at and us to examine. For example, here on gold, you can see that we failed to break 1795 multiple times. This wick down and upside move we had after was FOMC from last week, where the Federal Reserve confirmed no tapering, no interest rate hikes, continued support for the economy and keeping the economy in an accommodative state. And we can see that leads to short-term increases in inflation. Investors hedge inflation increase risks by pooling money into gold. What we had after FOMC is an upside buy play until the end of July and start of August to previous highs. Then at the very start of the August period, to set up the new monthly order flow, we had this pullback phase, still maintaining bullish market structure on the higher time frames, where in capital hungry we were calling buys from potential 1807 double bottom, break and retest above 1812.5. So overall, fundamentally, I'm still in a bearish bias on the US dollar. Even if the US dollar comes up to 92.2, just for the new monthly candle creation and upper wick and to set up the order flow for the new month, I'm still bearish to come down to 91.7 and potentially deeper. On the Japanese yen, remember, this pullback we're having on the Japanese yen is from a new low printed and also due to the start of the new monthly candle. So we're just having this deeper pullback phase. But even if we go to 92 flat, I'm still bearish on the Japanese yen, still bearish on the volatility index, and obviously still bullish on global stock markets and equity markets across the board. When I see that safe haven currencies like the dollar and Japanese yen are relatively bearish, when I see that the volatility index, which shows me fear or greed within North American stock markets, is bearish, and I see that global stock markets are still extremely bullish, this shows me market sentiment and investor behavior is still very confident and optimistic, and they are still continuing to ride the stock market buys with the support of the central bank. So when you can identify that, you can play that short-term weakness in the dollar and Japanese yen to our advantage. We want to play that weakness in the dollar to our advantage on gold with the continued support of the central bank stimulus for potential either retest buys at 1812, breakout buys above 1820, or the safest buys above 1828. So so you can see here, some of our private channel members have already caught buys from like 1806 and 1812, just because we do market update and trade idea webinars daily, as well as New York trading sessions daily and the Capital Hungry private channel. But for this New York trading session now, continuation buy areas I'm looking for are, if we get a liquidity grab to 1812, I'm still looking for buys in that area and a retest in that area. You can see the way gold behaves. You could retest the area multiple times and still maintain market structure and still maintain your overall bias. I'm looking for the breakout above 1820 buys and also the breakout above 1828 buys as well on gold. And this is as long as US dollar stays relatively soft and that US economic data is also weak as well, okay? Otherwise, I would only be looking for sells on gold if we came below 1803 and 1795 higher time frame key levels. All of the white lines you guys see on the screen are based on higher time frame historical price points of interest that have seen great respect between buyers and sellers through the last 10-year period, 5-year period, 3-year period, 1-year period, and zooming into the month. So you see great reactions to these historical price points. That's why I like to use them as guide points of entry areas, especially on gold when we're playing pairs like GJ or any other pair. But on gold, I'm still in a bullish bias as long as US dollar remains weak, as long as the US economic data is still poor, showing us that the economies are going to stay in a accommodative state with the support of the central banks and Federal Reserve, right? So I'm looking for buys in the green boxed area, and I'd only be looking for sells if we came below 1803 or 1795 on gold there. All right, so I'm in a bullish bias on gold at those price points, okay? And what I just showed you guys. On GJ, I'm still in a bullish bias on GJ. No, the key levels on GJ are not 0.800 or 0.500. Those are PPLs. You guys can't hear me? I'm about to do GJ analysis now. Hello, hello. Can you guys hear me? I'm getting in the YouTube chat some comments that I'm muted. Okay, cool. All right, so very simple explanation on GJ. Ever since the pandemic crash, all we've seen is highs printed by buyers and continued pullback phases or consolidation phases. Whether the pullbacks are a day long, a week long, all you see is buyers printing highs and pullback phases and revisiting those highs once buyers jump in from better demanded price points. Right here we have a high printed by buyers, pullback phase here as well. Okay, so all I've seen on GJ and my bias on GJ for the last 8 months has been bullish. For the last year has been bullish. With UK equity markets rebounding, Japanese yen by itself being fundamentally bearish for the last year and a half, with overall market optimism, with a lot of the fear of the pandemic being priced in. A flood of vaccination headlines, economy starting to open back up, continued support of the central banks. All GJ has done is print highs by buyers, do pullback phases, and extend back up into those highs or potentially higher. That's all it's been doing. Right? So you can see here, when we zoom in more and you look at the market structure here on GJ, right? And we zoom in more on the 4 hour, you can't just draw trend lines to look at market structure. You have to look at key price points of interest. When I'm looking at GJ, these are the last price sensitivity areas here where we had highs printed by buyers, pullbacks to this area. We're going to be looking at gold buys soon too. And breakouts into new highs printed by buyers. So even though we had a pullback phase, and it was a more aggressive pullback phase for the new quarterly period going from June into July, and obviously the new monthly candle now, we had a deeper pullback phase. But where did the pullback come from? Don't worry, that's just to wake you guys up a bit. Is the sound on? Sorry about that. We're good now. Okay, where did the pullback come from on GJ? Even though we had this short term, just new highs being printed. So even though Like, for example, here you had a high printed, high printed, high printed, and you have these pullback phases that can extend from these highs that you can identify as some lower time frame bearish market structure as well, right? Here you had a pullback phase, high printed, and you come to this demanded price point at 149, last previous area where bullish market structure was respected. This is where you had highs printed from this area, and you had a pullback to this area and still maintain bullish market structure as well. Okay? What I'm seeing here when I zoom in further now on GJ is that we had this bearish market structure, exhaustion from those lows at 149, which is that price sensitivity area to the left, and from there a shift in market structure and bulls take over since that price point, with only having this pullback from these highs short term because of the new monthly candle and order flow setup for August, right? Unless we break below 151 and 151.2, I'm still in a bullish bias on GJ. What I'm looking for on GJ when we zoom into the time frames is what I'm going to show you guys is either 151 500 buys and scaling above the PPLs back up to target these highs and potentially higher. If Japanese yen stays relatively soft, if we don't break below 151.5 in these green box areas, I'm going to be looking for pullback and buys to the upside. I would only be selling below this wick and below this price sensitivity area at 151.200 with Japanese yen strength. So when we're watching the Japanese yen movement by itself through the New York trading session, if Japanese yen continues bullish and we break below 151.200, then I'd be looking to continue down on GJ below that price point. All right. So essentially, I'm more looking at this. No, I don't know what. Here. This was some bearish market structure. 149 was that key price sensitivity area. We had this bullish market structure since that point. This pullback phase is for the end of month profit taking at the end of July, start of August, and creating that order flow for the month of August there. Unless we were to break below 151.200, I can't safely take sells on GJ, especially after having this hard rejection and upside move here as well. So pretty much what I'm looking for is either we get a deeper pullback to 151.500 again, we hold 151.8, or break out above these highs at 152.2. This area, if we get the pullback down to here and fail to break, would be the high risk, high reward buy area. This would be the potential medium risk buy area. This is the safer buy zone area. High risk, high reward, medium risk, medium reward. Safest, waiting for the most confirms of failing to break the lows and breaking above these minor price sensitivity area highs. Safest buys if we come above here at 152.2, but also also the potential least reward as you're at least wanting to target these high points here. I would only sell GJ below 151.200. If we come below 151.200, then I'll look for GJ sells. Otherwise, I'm just letting GJ do its pullbacks, letting price set up as GJ does do these aggressive pullbacks as it can be continuing to the upside. And this pullback phase here makes sense as it's been for the start of August to set up that order flow when you go look at the monthly charts. Gold, we're looking for buys above 1820, but I'm just going through my analysis first across these main pairs. We already did our gold analysis if you just want to rewind the stream, and I'm just doing GJ now. Then we're going to look at GBP USD, Euro USD, USD CAD, and US 30. But in about 7 minutes, we have the ADP employment data. It's not NFP, it's from the private job sector, but it's still going to have a short-term impact on gold and the US dollar. So it would be best just to wait for that. We have that economic data in about 12 minutes. So until then, I'm just doing analysis on the other pairs and marking out those trade ideas, right? I'm doing the analysis on the higher time frames, daily, 4 hour, 1 hour, to look at market structure and price action. But when we look for entries, I'm going to be looking for entries for the scalp trades on the 1 minute time frame to observe price action the fastest and reactions at our areas of interest the fastest as well. All right. Okay. So if you guys just joined the stream and you missed the gold analysis, just rewind the stream maybe like, I don't know, 15 minutes, 10 minutes. And then you can also rewatch this GJ analysis given for trade ideas throughout the New York trading session as well. We're going to be watching the markets for the next 2 hours, as well as news headlines to the left of your screen, some of the economic events reports to come out as well regarding the US ADP and the US ISM non-manufacturing. And we're going to be waiting for those price points of interest given on gold and GJ for some potential trade ideas to execute on with good risk management, emotional control through the New York trading session for the next couple of hours, all right? All right, let's go to GBP USD here. We're just going to start on the daily time frame, quick higher time frame review just to show you guys that GBP USD is the same market structure as any of our other risk currency against safe haven pairs. US dollar being the safe haven is the secondary in the quote, and we know that for the last year, the US dollar has been extremely bearish. Pop quiz. Why has the US dollar been so bearish for the last year? YouTube chat, private chat. What are the fundamental reasons? So because they keep printing money, what does that do to the US dollar? Good, pretty good pretty good answers. I just want to make sure people understand the process. So, Federal Reserve, they see the economy is in an extremely uncertain state due to the pandemic, due to coronavirus. Federal Reserve uses their monetary policy tools to flood the US stock market and to flood the US economy with US dollars. To do this, they have to first increase the US dollar money supply within the market, where you have an increase of supply and a decrease in demand, because at the same time the demand of the dollar goes down as well, because the demand ends up going into the stock market, right? So you have an increase in supply and a decrease in demand, which devalues the US dollar over the last year and a half, because all of that increase in US dollar money supply went back into the government through government bond purchases, back into corporate America through corporate bond purchases, back to the people through the stimulus checks and debt that was handed out to all the people, and back into the stock market. So for the last year, the stock market has been extremely bullish, the dollar has been extremely bearish. When you understand that fundamentally, now when you look at a pair like GBP USD, and you understand that the US dollar is the world's reserve currency. It's the world's reserve business currency. Majority of bank-to-bank business, majority of oil trade, majority of import and export between countries is still done in US dollars. That's why it's the world's reserve currency and the global business currency. And that's why, regardless if it's the secondary in the currency quote, in the currency pair, it still holds more value and more impact than majority of the time the primary in the quote. So with that weakness in the US dollar and that more of optimism on the GBP side, for the last year and a half after the pandemic crash, we've only seen this upside play, with buyers continuously printing highs and only having pullback phases that take us back into the previous highs, right? When you're looking at market structure price points of interest, you can see this is the last demanded price point zone where we had buyers extend us into highs, a pullback, and extend into those highs again. Okay? what you can see for the new month of August and even the new quarterly period is from these highs printed, we had a deeper pullback phase to that exact same demanded price point, but we still failed to break. Fundamentally, the US dollar, the Japanese yen are still bearish. Technically, the market structure on GBP USD is still bullish. We still have the support of the Bank of England. We don't have any Brexit negativity to have a bearish impact on GBP. We have a bearish US dollar. With what I am saying, what do you guys think my target is, what my first higher time frame target is, and what my bias is on GBP USD? Another quiz. What do you guys think my bias is on GBP USD and my bias has been for the last 8 months? And what do you think at current price points what my target is? I'm not saying we're going to hit that target today, but as we start to make our way to the upside and if dollar stays flat, what is at least my target? Good answer. 1.42, 420. At least to previous highs, and once we reach those previous highs, potentially higher if we have that continued optimism and keep chugging away in this trend. Right? Now, with what I just told you guys, and with that being said, what price point would I need to break and what confirms what I need to have to see long-term sells on GBP USD from the current price points? What price point would I need to break and what would I need to see on dollar to see long-term sells on GU? So what technical price point would I need to break and what would I need to see with the dollar? What would the Federal Reserve need to do with the dollar or with the policy positioning? So unless we get a break below 1.36 and we get confirms of cutting off the stimulus as well as increasing interest rates, anything fundamentally that the Federal Reserve can do, right? Then we're going to, I'm only looking for sells long term below 3.6, and if the Federal Reserve increases interest rates, tapers off the stimulus support, they decrease the US money supply and bring the demand back to the US dollar. All right. Okay, ADP news is bad. Gold spiked up through 1820. Very nice little break and retest here of 1820 as well. We're going to wait for some retests of 1820 if nobody got that. But that's just the ADP data. Don't worry about that. We were in a gold buyer's bias anyways. It's not like we were looking to sell gold. Let's see if we can get the retest of 1820 or the breaks above 1828 for continuation trades. What people were here from the start when we were calling 1820 buys? Did anybody jump in that by yourself? You guys are already up 40-50 pips in a couple of minutes. If you guys took the 1820 buys called at the start of the stream, secure some partials at 40 to 50 pips here and leave your runners risk free. Remember, if you are scalping and you're going to be in and out of the market for those short periods of times and quick ranges, if your trading plan and trading style is scalping and you just took those 18-20 buys and got 30 to 40 pips, as a scalper, secure some partials. Leave your runners risk free. All right? If you're a scalper. Otherwise, if you did not get to take the 18-20 buys, emotionally neutralize yourself. Don't have any fear of missing out. We're going to keep the stream going for the next 2 hours. We're going to be waiting for retests or breakouts of next key levels for further entries on gold. But did you guys at least understand why gold is bullish, why I'm in a bullish gold bias? Especially if you guys watch the last webinars, this will teach you guys a lot about anybody who's having questions about the Federal Reserve stuff and interest rate stuff. Please watch this webinar. It'll tell you exactly what's going on. And if you could see my gold bullish bias from this last trading session as well. Okay? GJ is dipping lower to 0.500 because Japanese yen's just picking up some short-term strength from that weak data. But we didn't take any trades on GJ. We're waiting for the 0.500 reaction. We're going to let GJ do its pullback, and we're going to watch it at 0.500. Okay, so gold, if you got 1820 buys, I would secure some partials and leave runners risk-free. GJ, we're going to be watching reactions here at 0.500. We're only selling below 151.200. Now let's go back to GBP Usd though. So anyways, we just got sidetracked there looking at the ADP data and the quick impulsive play on gold, right? But let's go back on GU. Now you guys understand, higher time frame, G's in a bullish bias on GU, right? Above 1.36, I'm in a bullish bias technically. I want to at least target these previous highs. As long as stimulus stays active, even if we get some pullback waves in here, we're gonna keep slowly chugging our way back up to those previous highs and potentially higher. All right, so now let's go zoom in more to the intraday time frames on GU. You can see here, this is that bearish pullback structure at the start of the new quarterly candle from around those highs printed at 1.42 we want to target, right? We had this downside play all the way to that 3.6 area, which is that demand area on the daily. Very nice upside play, and then continued bulls from there. This was also instigated by weakness in the US dollar from FOMC. You can see we went to go print these new intraday highs to meet these prior highs here, but then had this pullback phase just for the new monthly candle. Okay? So now I'm still in a bullish bias on GU, but you can see from this intraday high printed just for the new month of August, we had that lower wick being created in the order flow setup. Now we're creating a bit of a consolidation zone here where we just have an order block forming on the intraday time frames. Who's the guy screaming GJ buys? I didn't tell anybody to take no G. Oh, you're not talking about me. I just told everybody we could get a pullback from all the way to 0.500. I didn't advise anybody to buy or sell GJ or do anything on GJ yet. But I just said we could get a pullback from current price points to 0.500, and I'm going to be watching reactions here. I would personally still only be calling GJ sells if we come below 151.2. I'm still watching this price sensitivity area if we start to get some exhaustion and make our way back to the upside with how GJ just behaves on the intraday time frames. When I look at GJ, and especially when it's moving more bullish, right? When you look at some of these bullish stretches here, let's look at this stretch, and then you have some of these hectic pullbacks and consolidation zones where these pullback and consolidation zones can be 100 pips large. You have an upside move, consolidation zone, whatever it may be, right? You can see with this stretch and this pullback for the new monthly candle, I'm not that concerned when I'm looking at this initial upside stretch we had from these lows in that demanded price point. This area here around 151.2 is around the 50% correction point. So when I see impulsive moves versus corrective moves, and especially that this was the impulsive move, this was more of the corrective move for the new monthly candle. If we don't break above these price points, I still just see it as a pullback and buyers getting back in to continue back up. If GJ wants to do these little bits of pullbacks in waves, that's normal. The market moves in waves, right? I'm only selling GJ below 151.200 and 151. Okay? Like for example, you don't want to be in a pullback phase on GJ, and this deeper pullback makes sense because it's the start of a new monthly candle, and then buyers jump right back in and continue back up with the trend. That's why if we cleanly break below these lows in around 151.200, I can safely take sells and be confident in the sells if Japanese yen is holding strength. For me to take sells here against my bullish bias, that would be more of a guessing game. And that would be more going against my higher time frame bias and counter trend trading. I personally do not trade the pullbacks or counter trend trade. I just wait for the pullbacks to happen or the consolidation zones for a breakout and play with the trend. But that's all that is there. And you can see the reaction right to 0.500 as well for the time being. So we'll keep an eye on GJ there. Gold, don't worry about gold. If you're still holding your risk-free runners, that's all good. We're going to be waiting for 30-minute candle retests of 1820. Either something like this on the new 30-minute candle or next set of buys above 1828 as per our analysis given. Very nice lower time frame price action right now. I already told you guys we were expecting weak economic data as well, which the reason why gold is going up on the weak economic data and the reason why dollar is going down on it is because the continued weak economic data reports show us that the US economy is not where the Federal Reserve needs it to be yet, right? So with the US economy not being where the Federal Reserve needs it to be yet, that means stimulus and fiscal support is not going to stop anytime soon. That means US dollar printing is going to continue. And we know if US dollar printing continues, a continued oversupply on the dollar bearish. And obviously, so the weaker economic data, because what I want to show you guys is if you look at US 30 here, US 30 is that economic data was extremely poor, right? And we're seeing continued worse data from the US, but US 30 is not dropping. If you zoom out and look at US 30, it's just sitting at its all-time highs. If the economic data is so poor in the US, how come the stock market's not dying? What is the stock market riding? Are you guys getting alerts still in your guys' ears? What's that? I didn't get nothing here. Which alert did you guys get? No, they're off, man. Which alert just went off? Which was it? Tell me where it was. Sorry about that. Yo, it's just a wake-up call. Just a little wake-up call in the morning. Where are these beeps coming from? Where are these beeps coming from? Sorry, let me check these alerts quick right here. This is the last alert, 1820. No sound. Only 1820 alerts come off and they have no sound. TradingView is tripping. Apologies, YouTube. TradingView is tripping. Only gold alerts have gone off. Unless it was this GBP CHF alert I got. No, that has no sound either. Yeah, I don't know, guys. I think TradingView is tripping out. Oh, it repeats it. Sorry about that. I think TradingView is tripping out a little bit. Yeah, it's TradingView. I didn't. You guys are hearing the beep when these other charts sync. Just let it go. But anyways, back to the topic. If we see that continued economic data is poor in the US, which means the US economy is not in a good state, how come the US stock market is not dropping? Why is the US dollar going down? It's not false. What do you mean by false optimism? Why is the US stock market not dropping when the US economy is not in a healthy state? How come we just had that poor data and we had continued poor data, but every single dip on the stock market just goes back up to the highs or consolidates at the highs? Remember what we were talking about, the Federal Reserve? Exactly. The stock market buyers and the investors who are riding the stock market buyers are dependent on the US dollars being printed and put into the stock market by the Feds. That increase in US money supply that the Federal Reserve did is what's keeping the stock market bullish. That's where that line comes from. Printer goes brr. Federal Reserve printer, money printer goes brr. That's that little stock meme. Stocks only go up. That's where that little meme comes from. It's due to Federal Reserve printing and the stimulus given. So whenever you see weak US economic data and the stock market doesn't drop, it's because that weak economic data is showing investors and smart money that stimulus is not going to be stopping anytime soon. Every time we have a poor economic data report, every time the labor market is not where the Feds need it to be, every time we have drop in PMI figures, increase in unemployment, drop in NFP, this just shows us that the Federal Reserve is going to keep stimulus active. They're going to keep pumping the markets. They're going to keep printing the dollar. So this impact of what the Federal Reserve does, because they're the ones who dictate the US dollar supply and value, if they keep stimulus active, that means bullish stock markets. That means bullish gold. That means weaker US dollar by itself. Stocks go up when the dollar is down due to exports being more favorable. That's incorrect. No, it's not because exports are being more favorable. It's because the increase in US money supply and the Federal Reserve literally pumping the market with that increase of US money supply. It has nothing to do with imports and exports of why the stock market has been bullish. But that was a good guess. But just to correct you there so you understand. The dollar is going down due to an increase in money supply by the Federal Reserve to use that money supply to support the US economy. No, that's the only factor the stock market is bullish. That is the only factor. After this crash, the central bank further cut interest rates, increase quantitative easing, increase asset purchases, and put that US money supply into the US economy. That's the only reason stocks have been bullish. Because think about it. When you had this pandemic crash, right? You still didn't have vaccines out for the first 6 months. You still had economies locked down. You still had businesses shut down. You still had people not working. You still had mass market fear for the first 6 months of the pandemic. But the stock market was already bullish. It's because the central banks are the ones who have the power and support all that and dictate all that. It starts from the central banks and moves down. They're the ones who control what corporations get credit allocation, how much money the government's going to be getting for infrastructure support, how much money the citizens will be getting for their stimulus checks, how much money they're going to be, how aggressively they're going to be buying assets to increase the value of the stock market. Because the Federal Reserve much rather sacrifice short-term weakness in the US dollar than have the stock market actually crash and cause a depression. They don't mind having a major correction on the stock market to get better prices for them and the whales. But to have an actual stock market crash, that's a whole different scenario that would actually lead to a US economic depression. All of those companies within the stock market would go bankrupt. So they much rather increase the US money supply. They much rather sacrifice short-term weakness in the dollar. They much rather sacrifice short-term increases in inflation, which the people pay the price for that. The 1%ers when the US dollar supply increases and the money goes into the stock market, inflation goes up. Cost of goods for the day-to-day citizen goes up. The buying power of the dollar goes down. Right? The people are the ones who pay the price of that because they're the ones who have less buying power with every dollar they hold in their pocket, and they also have to pay more for the cost of goods day to day because of inflation increases. But the 1%ers, the corporations, the rich, they get richer. It's always the middleman, the middle class, the working class that pays the price. Everything in this world has a cost. Everything in this world has some type of risk to get a reward, no matter what it is. and for the stock market to remain bullish and come 5,000 points above pre-pandemic highs, the sacrifice is inflation, increase in cost of goods, and a devaluation of the dollar. The people who pay that sacrifice and pay that and pay the piper are the middle class, the working class, the general public. They're the ones who already lost their jobs, already lost their businesses, are more dependent on the US government for stimulus checks. They're the ones who still have to go and buy their groceries day to day, but gas prices, grocery prices are going up due to inflation, which you can confirm with CPI figures. And also the buying power of their dollars going down. You can see that with a simple glance of the US dollar chart. You go to the US dollar here, and you go to the daily time frame, the US dollar over the last year since the pandemic crash went from having a value of around 102 and 104 all the way down to 90. A 12-point drop. That's decreasing the buying power of the dollar of every American citizen in their pocket. And also increasing inflation. Right? I don't want to talk about this too much because I talk about this a lot in the private channel. And I talk about this like I'm not saying like, oh, if you want to learn more about this, come to the private channel. But I don't want to talk about this too much because I did a full hour-and-a-half webinar on this whole topic if you guys want to understand that. Central banks are the market movers. They're the whales. Who they allocate credit to down the line, they make sharks. The central bank are the whales. They create the sharks in the market. We're just guppies. We're just little goldfish trying to find our way, trying to navigate the ocean. If inflation increases, the US gains strength. No, that's 1,000% wrong. If you guys watch this, it'll explain. Alright? I want to go back to the analysis, back to some potential scalp ideas. Because I just missed those GJ high risk, high reward buys I told you fuckers. You just completely went opposite of what I said. Shot and take. If just watch this webinar, ladies and gentlemen. It'll teach you exactly what you need to know. Okay? I missed calling out the GJ buys because I was trying to answer people's questions and call this out. So dollars continuing bearish, that's good. Gold, okay, gold buys are active from 1820. Did anybody take the GJ buys from 0.500 we were talking about? The high risk GJ buys from 0.500 area here. That's almost up 20 pips as well. Double bottom? Come on, the double bottom? If you guys are scalping right now, if your trade idea, if your trading plan is scalping, if you took the buys from these lows on GJ at around 151.55 and you caught 10 to 20 pips right now, secure some partial positions. Even close the whole position if you're a scalper. Remember, if you are a scalper, do not let FOMO and greed take over. Too many people are come to this market saying they're scalpers, that they just want to scalp 10, 20, 30 pips, and then they end up holding a trade for hours. Then they end up wanting 50 pips. Then they end up wanting 100 pips. Stick to your trading plan and stick to your trading style. If you're a scalper and you caught the 18, 20 buys, you got 40 to 50 pips. If you just caught the 0.55 high risk buys, you just caught 15 to 20 pips. Alright? Hold your runners risk free. The next set of buys is going to be if we get a break and retest above 151.800. Otherwise, if you do not get that breakout above 151.800, you have to be mindful of this lower time frame structure that's still intact here. For anybody who took these buys on GJ from the double bottom of the lower time frame at around the 0.500 area, you would have to now break above this lower time frame bearish market structure to have validation to extend your buys. And for anybody else who wants to take further buy scalps, it has to be a break and retest on the 1 minute time frame above 0.800 now. All right. So GJ buys played out so far from 0.500 scalps for 15-20 pips. Gold buy scalps played out above 1820 as well. Let's go back to some intraday GU. I'm actually looking for buys soon on GU as well through the next 30 minutes. GU, I want to start to take buys above this zone here at 1.395 and fill this range back up to these highs and potentially higher. So GU on the 1 minute time frame, I'm either looking for this, or if we have a deeper pullback to 3.9 buys, or the safest buys above 1.4 flat. Okay? I'm just trying to give you guys good advice from somebody who's in an emotionally neutral state. It's very easy that when you're trading with a group and you have these trades play out during volume, like the gold buy scalps or the GJ buy scalps for 15-20 pips, that your heart starts racing, right? Your heart starts racing, you get that dopamine hit, you feel really great that you just took a trade and made profit. But when that dopamine hit happens, when those happy emotions flood your brain, when your heart starts to beat a bit faster, what happens is that you start to not think logically anymore. You start to think emotionally. And most of the time on the good, when you take a winning trade and you feel great and you have a dopamine hit, right? This is where greed comes into play. This is where you might get more greedy. You might want to hold your trade longer. You might want to take another trade right away and have more wins. You want to make even more money before the session ends. Stop right there. Give yourself a slap on the face. Go fucking splash some cold water on your face and relax. Take some deep breaths. Emotionally neutralize yourself. Follow your trading plan. If your trading style and trading plan is scalping, if you say, hey, I'm a scalper, I come on New York session and I scalp, then you don't need 50 pips. You don't need to hold your trade for hours long. You got to stick to your plan, and that's it. In and out. If you're a scalper, in and out of the market. Now, if you're an intraday trader, if you're a day trader and you took those buys here on GJ, for example, and you might want maybe a 50 to 100 pip target. When you're watching price action now, if you're an intraday trader, you would need to have a break above 151.800 to even have validation to hold your trade. And if you're an intraday trader and you're holding gold buy still from 1820, you need to have a break above 1828 to extend your trade. Remember, I'm trying to cater to people of all trading styles. So I have to give psychology tips that are going to be relevant to your trading style. If you are scalping GJ or gold from 1820 or GJ from 0.500, then you should be out and done. You're done for the day. Okay? If you're scalping gold and GJ from those price points, you should be in and out done. 15-20 pips on GJ, almost 40-50 pips on gold. And if you want to take another scalp, next set of scalps on gold would be above 1828. Next set of buys on GJ are going to be above 0.800. Or if gold gives us a double bottom at 8, next set of buys on GJ is either new 4-hour candle and NYSE pullback, double bottom at 1820, or break above 1828 now. Gold has sort of been missed now because like we're already 45 minutes into the New York session, but we still have NYSE volume still coming in another 45 minutes, and we still have the new 4-hour candle setting up in 18 more minutes as well. Okay, so next set of buys is these areas on gold. Don't just buy in the middle of the range now. The reason why I have, okay, so see these red lines where you see great price reaction in the lower time frame, and we just took a buy off this area. See these white lines on gold where we just took a buy off this area. Now, your key levels, quote unquote, right? They can be subjective to whatever you want it to be. But these key levels, the reason why I use them is not only for a technical purpose. It's also for a trading plan and trading psychology purpose. A part of my trading plan and rules is that I only enter trades at the key levels or at the PPLs on GJ or at predetermined price points of interest. Meaning, for me to enter a trade, I have to do analysis first, have exact bias, have a step-by-step of what I'm looking for, and have exact price points I'm looking to enter on. This prevents me from entering based on emotion or FOMO and entering at random areas because if you don't have rules of why you trade, how you trade, when you trade, what you trade, where you trade, then you're going to be more inclined to follow emotional decisions and be like, oh, you know what? Well, GJ looks like pretty good to sell right now. Maybe GJ can go back down to here. I'm going to take a sell. Maybe GJ can go a bit higher. I'm going to take a buy right now. Because when you're observing the markets, especially as a scalper or day trader, there's always trades available. There's always a potential trade available. So what that can do, because the market is always moving, it's always active, is it can seduce traders into taking emotional trades and over trading and doing dumb shit. So these price points of interest, it's not just because we have great reactions there. That's just a technical benefit. Is the PPLs on GJ is great reactions to observe as entry points. The key levels on gold and across pairs, great for entry points, great to observe reactions based on historical price data. But that's not the only advantage. The advantage is that it gives you more control in your trading. You don't enter GJ unless it comes to one of these price points. You don't trade gold unless it's at a key level. For example, private chat, did I call gold buys? Like, we identified this zone as a price point of interest. But do you guys see me call gold buys at like 1810 or 1816 or 1824? Or in Capital Hungry, did we only call gold buys at 1812, at 1820, and now 1828? Another mentor, another service, they might have different key levels. They might have different price points of interest. But mine stay standard because when I keep them standard, I have specific rules to follow. It gives you more control in your trading. Too many manual retail traders, right? They focus all their mental energy and attention on what they can't control in the markets. And guess what? 90% of the markets is out of your control. But not enough people take control, not enough people take action in what they can control. So what can you control in your trading? Well, you can control when you trade. Well, first of all, you can control how you trade and why you trade. You should first know why you trade. What are you trying to get out of the market? What are your goals? Your short-term goals, your long-term goals. Are you trying to be a full-time trader? Are you trying to supplement your income? Are you trying to pay a couple of bills a month? Are you just trying to maybe develop long-term wealth through trading? What are your goals? What are you trading for? Why are you here? If your reason is I want to make money, you're going to fail. That's not enough. You need solid long-term goals, and you need a purpose that's going to push you past your emotions and past your own selfish self. If you don't have long-term goals, if you don't have a bigger purpose that you're working towards, you're always going to be your biggest enemy. Your own emotions are always going to stop you. Okay? Then you have to take control of what you trade, when you trade, how you trade. Have specific rules behind all of that. A trading plan. You know? Some of the trading plans in Capital Hungry, man, I showed you guys last time as well. They're crazy. They're off the charts. I'll show you guys an example. Your trading plan should be like, no, that's not it. But I sent Ashes too. I showed you guys Axel's. Axel is actually the member who won the last $1,000. The last, right? Look at this trading plan. Why you're trading, personal background, short-term goals, long-term goals. Look at this, trade management steps, risk versus reward, what you're trading, the times you can trade, analysis style, what you're looking for. exact examples of trade ideas as well. Personal reflection, a schedule of when they backtest, when they do analysis, how long they're going to be following this trading plan, right? Because I did a webinar on trading plans, and I requested all private channel members make a trading plan and then send it to me. Yeah, but you need both. You can have as many chart hours as you want, but you're not going to be a successful trader without discipline. You're not going to be successful in anything without discipline. Chart hours is just developing your experience, but without a business plan, without a blueprint to build your house, without a trading plan, you'll never actually move forward towards your goals. This is another member's, right? Weekday routine, charting plan, things to do over the weekend, their routine, their schedule, their goal, their trading style, trading rules, entry confirms, trading examples, risk management, how they're going to be risk managing, how they're going to be trade managing, how they're going to be back testing. Everything is like a business plan. This guy even added his own contractual agreement. Accountability. This, at the end of the day, we all know that common statistic that 99% of retail traders lose, right? And I'm just trying to give you guys that the reality is that's due to nothing but trading psychology. Too many people do not take trading seriously. That's just what it is. Too many people do not take trading seriously. They do analysis, they take trades every day, they come watch streams, they go join services, but they have no long-term goals. They have no short-term steps towards those goals. They have no trading plan. They have no long-term business plan. But they want to be millionaires. They want to be a full-time trader. It doesn't make sense. And it doesn't make sense because they keep losing. Right? So I know it can get annoying when I talk about trading psychology and I talk about the emotions and this side of trading that most people don't talk about. But if you go to my YouTube channel, you can already find more information than any mentor, any service you ever joined on technicals and fundamentals. But you have to put just as much attention on your emotional and psychological development if you are a manual retail trader. Because the reason why I'm saying this is I've had guys who are much older, much more experienced, that were in capital hungry, 40 years old, full-time traders, right? Manual trader. If you are an algorithmic trader or you program your trading, that's different. But if you are a manual trader, emotions will always be there. This guy, great guy, nicest guy I ever met, extremely hard worker, more experience in the markets than me. He actually knew more than me. He just liked the capital hungry community and service, right? And I knew him before capital hungry as well. Guess what? He went through something in his personal life where, pretty much to summarize, his wife abandoned him. Pretty much got up and left him, pretty much leaving like a message or a note saying, I'm not coming back, and wanting to go through the divorce process, all of that. And he has a kid as well, right? Guess what this did to him? Completely shocked his world. His whole world did a full 180. His emotions were out of whack, out of control, right? He became extremely depressed. He went back to drinking. He went back to losing his discipline. He went back to not giving a shit about how he looks, his body. He didn't give a fuck about the world. All of these emotions from his personal life got leaked into his trading. I saw this guy come to me and say, after having a year of progress and making 80K in the year, crashing all of it in a day. Right? Crashing all of it in one day, being drunk out of his mind and trading the markets. You have to understand, you could have a full year of discipline in the markets, you could make $50,000. But if you slip up emotionally, you could lose that $50,000 in one day. Think about it like, let's just say you were using one lots and you were continuously developing your account and you made 50K in a couple of years. But then you're just going through so much drama or trauma in your day-to-day life where you just snap one day, you're going through a divorce, you're going through an addiction, you're going through something, a death in your family, and one day you're like, fuck it, and you drop a 50 lot on gold. No stop loss. And it drops 50 pips. There's 25 grand gone right there. Just as fast in the markets as you can lose $1,000 or $100, you can lose $100,000. Just as fast. It's not like if you have a bigger account, you're safer. It's all about your emotional control, your risk management, you sticking to your plan. You understand? Whether you have $50, $100, $1,000, $100K in a trading account, you can lose them all equally as fast. If you're greedy, if you're over trading, if you're over leveraging in relation to your account size, you can lose it all within seconds. So that's why I'm telling you guys, everything might seem like a joke. Everything might seem like, oh, I watch this stream, I catch 10, 15 pip trade. I'm going to go follow this mentor. Oh, I made a couple of dollars today. Oh, I overtraded next week. Everybody treats this like a joke. No plan, no direction, no goals, no personal development of their own mentality, of their own physical well-being, mental well-being, financial well-being. There's no development of that. People are just on social media all the time, wasting their time primarily, and within trading not taking it seriously. But everybody knows in trading, when you come into it, that one statistic that we all know, 90% of retail traders lose. And then they go, why? Oh, I wonder why. They say, oh, banks are targeting them, brokers are hunting my stop loss. No, you're just a fucking retard like the rest of the 90%. You're not putting in as much effort as you think you are. You're not putting in that extra 5 hours a day to study the markets, to study financials, economics, backtest technicals. You're not putting in that personal development to remove some of your own bad habits. For me, you have to understand, just like Trading Journey saying here in the chat, the market is designed by humans, greed, power, and corruption, and it's literally designed to take advantage of human inefficiencies and weaknesses. Right? For example, me. None of us are perfect. Me, I'm extremely aggressive and have a very addictive personality outside of trading. So this is both good and bad. This means that I'm more of a risk taker. I'm not as docile and I go after what I want. But it also means that I sometimes overdo things, which can be over trading. That I also can be too aggressive and also sometimes make very abrupt, addictive, emotional decisions as well. Right? So I have to be self-aware enough to understand my strengths and weaknesses and say, all right, if I'm very addictive and I have a very aggressive personality, then I have to learn how to balance myself out and grow more discipline and grow more patience. But not everybody is going to be like me. Some people are on the opposite side of the spectrum where they're very docile. They're the opposite of a risk taker. They're very scared to take any risks. Well, that's the same thing. That has a good and bad. They might be more patient. They might be more patient and more logical with the market, but at the end of the day, they're too scared to ever even take a trade. They're too scared to ever execute. They're too scared to ever take the risk. We have to find out what side of the spectrum we are on in terms of personality traits and bring ourselves to a middle yin-yang balance, which is extremely hard but possible if we put time and effort into it. Right? Majority of people I've seen in Capital Hungry private chat, whether it be out of the thousands of people that came through, people are majority on either one side of the spectrum, either extremely addictive personality, risk takers, very aggressive, or they're on the opposite side of the spectrum where they're scared to take risks, very docile, very patient, and both of those sides is not good to be a trader. If you're on one side of the spectrum, like the addictive, aggressive side, there's a high probability you're going to over leverage, you're going to gamble, you're going to over trade. If you're on the other side of the spectrum and you're very docile, there's a high probability that you're never going to take the risks needed to be as successful as you need to be. You're too docile, you're too scared. those human inefficiencies get targeted. The market targets those human inefficiencies and weaknesses, right? But anyways, new 4-hour candles here, 9 a.m. Eastern coming up. So far, we had great buy plays on gold above 1820. We're going to be waiting for this 4-hour candle to close, which is in the next 2 minutes. Very nice and bullish candle close here coming. Oh my God, even about to bust a nut right here. Nice range to range trade. Very solid bullish engulfing here. All I'm looking for is the next 4-hour candle to make a quick lower wick and then come above 1828 and continue at least to these highs and potentially higher if we break above. Even if we do a deeper pullback to 1820, still bullish bias on gold. Looking for the pullback buys at 1820 again, or the minor pullback break above 1828, safest above 1836 at this point. Those 1820 and 1812 buys overnight and 1820 buys ran great. Yeah, like too many people think you're supposed to have a 90% win rate. Too many people think that when they lose, it's the end of the world. Like all this, like it's just all that stuff is from false expectations from social media and people joining like social media gurus to learn about the financial markets. If you guys come to the Capital Hungry YouTube page, you're not going to see any clickbait. Okay, you can go learn about the pandemic and central bank timeline analysis, how the central banks work, and exact technical and fundamental examples to validate those concepts. Right. This is a great one as well. Retail traders, terrible expectation. Honestly, all these webinars are good. You either have webinars to help you develop your psychology and your mentality in the real world, such as the growth or feelings webinar, the power of choice webinar, the human dependence on substances webinar. I'm personally trying to quit marijuana and weed. Everybody loves fucking weed, but I'm trying to have full ownership of my mentality and brain. No caffeine, no excess sugar, no weed, no THC, nothing needed. It's hard as fuck, but it's possible. Mental law, all of these webinars, right? I haven't been sober at all yet. I did not cold turkey it. I think George has been cold turkeying it, which I respect. Right? But if you guys go to the Capital Hungry channel here, all you're gonna see, you're not gonna see no Lamborghini videos. You're not gonna see no clickbait videos. You're not gonna see, hey, make $10 in 10 minutes or make $1,000 in 10 minutes. You're only gonna see educational videos here about central banking system, economics, finance, technicals, psychology for the last year. Whether it's scalping, psychology. If you guys actually go through all of these 100+ webinars for free on the YouTube channel, I guarantee your life will be changed. In like a good way. You know what I mean? I guarantee your life will be changed in a good way. You will know way more about the markets fundamentally and technically. You will be way more self-aware. You will be way more motivated, way more ambitious, a way more realistic view of the world and the markets as well. And none of these are clickbait. You can't. This isn't Q Bank's $60,000 fucking NBA league. You know what I mean? This isn't Mamba FX. This isn't Daniel Savage. This isn't fucking Anthony's World. This isn't Astro. This isn't Sean Lee bullshit. This is no clickbait, no retard shit, no dumb shit, no random cars, no random get-togethers, no random drone shots of people's houses, Miami pictures, club shots, none of that shit. These are real world financial markets. All right? So yeah, you have all this stuff at your fingertips. Tons and tons of webinars. Use it to your advantage. Yeah, what is that? Yo, did you guys hear about that 60K membership thing Q Banks is doing? Can somebody tell me what that is? Apparently, Q Banks has a new. Q Banks is making some stadium or some basketball court, and he's making like a. You know how all these influencers got clout houses and shit. Apparently, he's making some like fucking Miami clout house where it's $60,000 a year membership. Yeah, it's crazy. $60,000 a year. Okay, yo, let's look at gold here. We already made 4-hour candle close nice and bullish. This 4 already made a lower wick. Let's see if we can get some nice price action confirms above 1828 for some further scalps. But so far through our session, we had these buys play out. And remember I told you guys to take profit on... Oh, what the fuck is this? What the fuck is this thing? Remember I told you guys to take profit on those GJ buy scalps if we don't break above 0.800? You can see the lower time frame bearish market structure still intact. I still want to make sure, I still want to watch 0.500 reactions accordingly. Yeah, he's making a headquarter. He's making a headquarters for his marketing stuff, and it's $60,000 a year to join, to be in his circle. What the fuck? All right, so no further trades to be called on GJ right now. We're gonna watch reactions at 0.500. Gold, we're gonna be looking for further impulsive buys above 1828 for 20 to 30 pips up into 1831s. But we have NYSE open in 25 minutes. GU, we're going to be looking for buys above 1.395. This new 4-hour candle made a lower wick already. Nice order block, bullish consolidation, potential to revisit these highs. Dollar weakness, I want to look for that. All right. UCAD, we're not touching UCAD. Bit messy here. Euro USD, very disgusting. Oh man, Euro USD came right to the key level for the high risk, high reward retest. But Euro USD, we were calling buys last night for a retest at 1.84, breakout above 1.88. I don't see any further buy entries now in Euro USD until we break these highs at 1.19. This guy said 60,000. Am I living with George Clooney? Bro, I hope. Bro, for 60,000 a year, you should have freaking every morning you wake up. There's at the round table should be Warren Buffett, Jeff Bezos, Bill Gates, for 60,000 a year. You know what I mean? I should wake up every morning to breakfast with Warren Buffett if I'm paying 60K a year just to be a member in a house. Every year, every morning we should have eggs together, me and Warren Buffett. You know what I mean? Holy. I just gotta go to the washroom real quick, everybody. I've been holding in this piss for a while now. Make sure you guys subscribe to the YouTube channel, turn on post notifications, share around all these webinars, and watch all these webinars. Make sure you guys come join the free Capital Hungry Telegram analysis channel. Someone said, can we sell gold? You know what, bro? You by yourself, go ahead. You go ahead, go for it. Do whatever you wish. Make sure you follow the Capital Hungry Twitter as well. Okay, I just gotta go to the washroom real quick. We're gonna wait for NYSE open for some more potential trades on gold, GJ, GU, and Euro USD. If you haven't, this is if you did not already catch the 20 pip scalps on GJ or the 50 pip buys on gold, then you can take another trade. Don't over trade and over leverage. When we're looking at your headlines to the left of the screen, we do have Federal Reserve Bullard speaking right now, talking about the economy. We do have some headlines regarding Trump, so you guys can read that to the left of your screen. I just have to go to the washroom really bad. I'll be back in 5 minutes here. Anybody take these gold buy scalps already for 10, 25 pips again? I gotta go to the washroom. Give me 5 minutes. If you guys like the streams, do me a favor and like, subscribe, send a like to the stream. Oh man, I gotta pee. Okay, everybody, I'm back. All right, so I was gonna say gold. We're coming to that resistance area and previous highs to the left. So we had some very nice scalps play out here, but we want to be mindful in this area, right? We have to really clear above 1831, 1832 to get new highs printed. So just if you guys took those gold buy scalps from 1828, just be cautious about that, all right? Other than that, through this stream, we called the gold buys from 1820 that almost ran 100 pips total right now. I advised scalpers to secure their trades or partials here at 40 to 50 pips, and intraday traders to hold and wait for closes above 1828. We also called the new 4-hour candle to make a quick lower wick, then buys above 1828, which ran for almost 30 pips as well. GJ, we only called the buy bounce on GJ from 151,500 for 24 pips it ran. The only next set of GJ buys, now that we're getting some more exhaustion here, would be if we come above 151,800. All right. We've only executed trades on this stream for the GJ buys and the gold buys called with predetermined analysis and price points of interest that we called ahead of time. And the entries we called live as well. GBP Usd, we're starting to see the buys actually set up soon. Looks like these buys are going to be running. Looks like these buys are going to be running into late New York session, into daily candle close to potentially revisit these highs on GBP USD as well. USD CAD, US 30, and Euro USD we're staying out of. US 30 just because it's only ranging at its all-time highs. USD CAD, I don't like the price action and market structure at the moment. And Euro USD is also in a bit of a messier range, and we already missed the buys at 1.84 and 1.88. Okay. Now, we have NYSE in 13 more minutes, but I've been running the stream since like about 7:30 already. So I'm probably going to keep the stream going for like another 15-30 minutes. But any questions, charts, anything you guys want to send it to me in the chat now, okay? I'm just reading a couple of questions now. I'm going to read through the YouTube stream. And we're going to keep this stream going for like another 15-20 minutes until NYSE. There's no point over trading. There's no point continuing to stare at the charts when we already had great movement through the actual New York Open and after the ADP economic data. And we had some great intraday trade with the 1820 buys. And scalps if you took the 1820 buys or 1828 buys, as well as the GJ scalps off 0.500. No, I'm not going to be staying until 10 a.m. I'm going to go to the gym a bit earlier. I was only going to stay until 10 a.m. if we did not get the movements we wanted earlier on. But there's no point like over trading or over leveraging or staying at the charts when you've already taken some trades and gotten some wins. The only thing that's going to happen is if you continue to stare at the charts is you are going to get seduced to take another trade. How come you are so accurate when it comes to prices, experience, and time and effort put into the charts? Jeev, are you an alpha male? 1,000,000%, yes. How do you study seasonality? You backtest assets during seasonal changes. We actually have a I think an educational webinar on Capital Hungry on market seasonality. Could you make a quick explanation of how to decide a stop loss? If you come to that would be a whole webinar in itself, but if you come to watch the scalping series down here, Scalping 101 Part 1 Part 2, it'll show you how I apply stop losses based on market structure and price action. All right? So if you guys, like, I'm telling you guys, I don't want to get into too much details during these live streams because then it would be just way too much, you know what I mean? How much do I bench? Well, gyms have been closed here, but the most I could 1 rep max or probably do 3 reps was 315, and I could rep out 2 plate no problem. But I haven't been able to bench properly since gyms have been shut down the last year and a half here. Gyms are just starting to open back up like last week here in Canada, Ontario. But yeah, for anybody who's asking questions about technicals or fundamentals outside of the trade ideas called here, okay, please understand how much you have here. You guys gotta understand. I'm turning 28 tomorrow, right? Tomorrow's my birthday, August 5th. I've been working out since like I was 15, like since high school, since like grade 9, grade 10 high school. You know what I mean? So over the years, like it's been 10 plus years of like working out, not consistently like bodybuilding or trying to compete or trying to be a power lifter, but like just working out, like keeping myself in shape, doing weightlifting and stuff like that. I've been doing it since I was like 15, 16 years old now, right? And I'm like, and I'm in my mid 20s, so. Bro, you never hit 315 on bench. What? Yeah, but anybody who's asking questions about that stuff, like look at the resources at your fingertips. It's all from my point of view, all fundamentals, technicals across pairs, psychology. 315 is a lot for like a normal person for sure, but like again, I've been working out or doing workouts around weightlifting since I was 15, 16. How long have I been trading? I started trading late 2016. My first 2 years of trading was complete failure. I probably lost about $50,000 in the market my first 2 years. Being extremely addictive, gambling personality, wanting to make like 100,000 overnight, over trading, over leveraging. And then when I finally started to take trading seriously around late 2018, 2019, I've been profitable since, studying more of the fundamentals, technicals, and focusing on the trading psychology. Yeah, my first 2 years, I probably lost half my salary each of those years. Because every single bi-weekly paycheck I would get when I was working at the bank, I would put into the market and put into an account and just crash and burn it. Obviously, I would get some profit here and there, but I wouldn't keep the profit. Right? I'd make some short-term money, wouldn't keep the profit, crash and burn it. So 2016, 2017, like as I was working at Royal Bank of Canada, I was making about $60,000 a year when I first started working When I first started working at Royal Bank of Canada, I was working in back-end financial tech, and I was making about $60K a year. But easily, both of those years, half the salaries, I probably crashed it into the markets. Every single bi-weekly paycheck, I get 2 paychecks a month, right? One of those paychecks every month would go into the markets. But that was like 2016, 2017. Now it's like 2020, almost 2022. And now you guys can see what I am. If you guys come to the Capital Hungry analysis chat here and you go to first post, I'm actually going to repost it here. So when I started this Capital Hungry analysis chat in April 4th, 2019, this is when I started becoming more profitable. When I started doing more consistent analysis, understanding of fundamentals and technicals. And you can see here, this is when I was still using penny lots, but I actually started to make $1,000 in the week. Would actually withdraw that money, right? So 2019 is, so after 2 years of failure, then I finally started to create a trading plan, focus on specific pairs, started studying fundamentals and technicals more, and started from low lots, penny lots, right? I haven't traded in the last month because I was taking a break. I had a lot of personal shit going on. But you can see, like, these were some of the trades I was taking back then. This was 2019 when gold was at 1284. I would make like $400 in the day, $1,300 in the week. You know what I mean? This was 2 years ago when I finally started getting profitable consistently. The last trades I took and showed here was probably there's so much information in here, holy shit. And then this is the last set of trades I took on last month, end of the month last month. I made 20K, right? Same style, same strategy, same style. Gold, this was at a 1771 or 1773 key level, you know what I mean? We were already calling buys on gold since then. Same strategy, same style, same consistency. I just slowly kept increasing my lots since then. Right? So it's not like I started using 10 lots and 5 lots right off the gates. It's not like I started making 20 grand in a month or in a week right off the gates. My first 2 years was straight loss. Then the 2 years after that was having to completely reframe my mindset and start from scratch again. And then after that is now we're here in 2021. The reason why I'm streaming New York is because outside of trading, I'm trying to start a family soon, maybe get married and shit, go buy a house and stuff like that. And if you guys know me, you guys know that when I started trading, and especially when I used to work at the Royal Bank of Canada, I was doing shift rotations and I was working a lot of night shifts as well, right? So I got used to being up during the night and trading London session. And this was great for me. I didn't mind it. But at the end of the day, if you are doing night shifts, it does take time off your life and it does negatively impact your health. It is not normal to be awake during the night and all hours of the night and then sleep when the sun is up. So pretty much the reason why I'm trading New York session now and the reason why I'm switching to the New York streams is because trading London for that many years was starting to impact my health, my sleeping schedule, and also my personal life. Because think about it, when everybody in my life, my friends and family in the real world were awake when they're working, I'm asleep. And then when they're asleep, I'm up at night trading London or doing sessions at London, right? So I was missing a lot of stuff in my personal life. I was missing a lot of family stuff, right? And it was starting to impact my eating schedule, sleeping schedule, and health as well. So I was like, you know what? If I'm gonna be starting a family soon, or if I do want kids in the near future, I can't keep on the same routine of like doing these night shifts, especially when I have the opportunity and freedom as a full-time trader and running Capital Hungry, where I can switch back to a normal schedule. So the only reason I'm switching back to New York is to normalize my schedule. The only reason I used to trade London is because I really got used to it. I just got used to trading London. I got used to working night shifts at my last job at Royal Bank of Canada, and I just got used to it. And then I didn't realize the toll it took on me until recently. You know what I mean? Or like a month ago, I was realizing the heavy toll it was taking on me, being up all hours of the night and then trying to sleep during the day, missing all these family events, missing people's birthdays and friends events and all this shit. Like, it was fucking up my personal life and family life and shit like that too. You know what I mean? Because I'm from Canada, right? I'm from GTA, Ontario. So like, I'm in the Eastern time zone. So whenever I was doing the London sessions, it was the graveyard shift, right? Exactly. So at my last job, I was doing that, and I was doing shift rotations as well. The key levels on the charts are based on yearly, quarterly, and monthly historical price points. The rest, you gotta join Capital Hungry. Yeah, and I'm starting to get older and stuff too, where like I am starting to think about, hey, maybe I want children. Maybe I want to teach my kids all the information I've learned and like, you know what I mean? Instill good values into them. So I can't really like be a good father or a family man if I'm not even on the same schedule. But we'll see about that. Maybe I just want to be a bachelor and move to Japan and fucking live life solo. I don't know right now. Sometimes I think about just getting up and moving to Japan, moving to Singapore or something, and just don't tell anybody. Don't tell anybody. Don't tell my family or friends, and just do it. I'm stuck. I'm on a fence right now, and I'm at an age like I told you guys, my birthday's tomorrow, and I'm turning 27 or 28. I don't even remember, but I'm on the fence right now of like, should I go down the path and be a family man and get fulfillment in my life and purpose through children, or should I just go fucking do whatever the fuck I want? You know what I mean? Just go to Singapore and just fucking let loose. Just let them, you know what I mean? So I'm just on the fence. Like I've been trying to figure it out, and I don't know. I'm still stuck. I don't know what to do, you know? Yeah, just go fucking bananas. Yeah. So I've been trying to figure that out. Life's not easy, you know what I mean? Like there's so many choices and pathways you can take. I don't know, man. I've been a fan of Singapore and Japan for a while, and Singapore has been developing like crazy. Singapore is like the new Dubai. Have you guys seen Singapore's development? It's wild, man. They're crazy over there right now. There's so much money going into Singapore right now at the moment. And I really like I really like what I haven't been there, but like videos and stuff and meeting people from there, like the culture seems really good there too. Oh yeah, that's true. I never thought about shit like laws and shit like that. I forgot I have to look into all those details of moving to another country. Japan, Singapore, even Texas. I was even thinking about Texas. Yeah. Okay, economic headlines are quiet. NYSE open right now, fairly quiet. It seems like majority of the moves happened at the start of New York. GJ, those same buys are still active, but we're just ranging now between 0.500 and 0.800. GU buys are active right now, but only for like 10, 15 pips. Gold buys are still active as well. Yo, did anybody take the secondary gold buy scalps from 1828 key level? Yo, chat, Zoom chat, private or YouTube chat. Did anybody take the 1828 buys? For anybody who missed the 1820 buys? Yeah. If you are a scalper and you took the 1828 buys, I would secure some partials around this 40 pip mark we hitting, this 35-40 pip mark. If you are a scalper, if you are a scalper and you took the 1828 buys and you are in your trading plan and trading style is scalping, then I would secure some partials around that 35-40 pip mark and leave your runners risk free. Your dumbass counter trend traded it. You sold gold while you were watching this stream? Damn, you probably feel like shit. Hey, 1,000 ways to trade the market. Yeah, for the next 10 to 15 minutes, I'm going to be answering questions. If you guys want to send charts, I'll look at your charts. If you guys want to send the TradingView codes. Other than that, I don't have too much else to talk about. We gave analysis ahead of time for buys on gold. The 1820 buys played out for 110 pips. The 1828 buys played out for 30 plus pips. We gave analysis for GJ buys at 151,500 area, which played out for 25 pips. We gave GU buys above the gray zone, which played out for about 15-20 pips so far. We were looking to take advantage of US dollar weakness. We explained the fundamentals behind FOMC, central bank decisions, pandemic. So right now, I'm just going to be answering some questions for the next 10-15 minutes. If you guys want to send some TradingView chart codes, I can check your analysis, or if you guys want some advice or something from my point of view, I can give you the advice you need. Okay. Yeah, I have been. I don't smoke cigarettes or anything like that, and I'm not big on alcohol. But I've been smoking weed since I was probably about 18, 19 years old for the last 10 years, and probably been on a daily consistent basis for like the last 5 years at least. But I've already been starting to quit smoking and laying it back, and it's only been mainly like a weekend thing now. It used to be an everyday thing, multiple times a day thing. You know what I mean? But now it's just a weekend thing, and I want to fully cold turkey and stop it. I want to stop all external stimulants, like even caffeine. If you guys watch this webinar, Human Dependence on Substances, I just want to have as clear of a mentality and as much control over my own mind as possible. And some of my personal advice, my personal vices are weed, caffeine through like pre-workout supplements when I go to the gym. I've gotten to the point where I can't even go to the gym without taking pre-workout or something like of that nature. And I have a big ass sweet tooth. I have a big ass sweet tooth. I love sugar and chocolates and shit like that. So I've been trying to cut all that back and cut it all out too, and not have any dependency on any external substances. This isn't to knock people who drink. This isn't to knock people who smoke weed or who use substances. This is my own personal choice to develop my own discipline and have full control of my mentality and choices. Because now I'm at the point where I don't even smoke weed because I want to. I smoke weed because it's a habit. Because it became a part of the lifestyle. It's not even because I want to anymore. You get high, really. It's because you just fucking do it because you do it every fucking day. Right? So I'm trying to change all that. But that's my personal vices. Your vices might be different. You know what I mean? For me, it was weed, caffeine, sugar. Obviously, you need a little bit of sugars and salts and stuff like that, but I overdo it. You know what I mean? So everybody's vices could be different. Some people's is going to be like some actual hard drugs. Other people's is going to be, you know what I mean? Alcohol. Yeah. So if you guys trust me, if you guys watch these webinars, you're going to know exactly how I see the markets fundamentally and technically. You're going to know my view about the pandemic, lockdowns, everything. About society, about masculinity, about being a stronger man or woman. How to develop your mentality, physical health, financial health, you know what I mean? I see GJ going to the upside with rates tomorrow. I see the Bank of England following the same sentiment as the Federal Reserve, as the Bank of Canada, and as the Reserve Bank of Australia so far, where they see the economy, they see some downside risks with the economy coming from the Delta variant, and economic data is not where they need it to be, but they're going to keep interest rates low, they're going to keep everything the same, and they're going to keep stimulus active for the country. Yeah, if that ISM figure is also poor, we can expect some further upside on gold and weakness on the dollar at 10 a.m. Eastern after a pullback. I am expecting the ISM figures to be poor as well. No, I am not diabetic, but I think diabetes does go run in my family genetically though. So I could probably develop it if I keep eating so much sugar and shit. But right now, no, I'm not diabetic. But I think diabetes does run in my family, like from a hereditary perspective, like genetics. Have you ever considered taking B12 vitamin shots? I take vitamins. I take vitamins already. What's this? Can you look at chart? Yeah. 1828. You should have been entering at 1828 here. This was still a good entry for a scalp and your stop loss makes sense, but it's a bit later. I would have been entering at this bullish candle, weaker bearish candle, or this bullish candle. Just because the price action was just continued bullish candle beside this little liquidity zone, strong impulsive push, a little bit of a liquidity zone, and continued upside move, right? So still a nice solid trade, still a good scalp. But if you took your trade at 1828 here, you would have had your stop loss here, and you would have had a better risk versus reward here. It would have been a 1 to 3, right? Like a 15 pip stop loss for a 40 pip take profit there around 1832 area we're peaking at. But still a nice scalp, still a good trade, good stop loss and risk management there. Yeah. Do you expect the Feds to recognize the Delta variant potentially having a big impact on the economy? Daniel, I think you should read the last Federal Reserve statement. Did someone send that here? Fed statement? PDF? Anybody send that? But if you read the last Federal Reserve statement, they were already discussing on the potential of coronavirus outbreaks and the risks of the Delta variant. That is one of the reasons they are keeping stimulus active and they're keeping the economy in an accommodative state. Meaning, as long as the Delta variant is still lurking around, as long as coronavirus is still active, as long as people aren't fully vaccinated, downside risks to the economy remain. So the Federal Reserve is going to keep pumping US dollars into the economy and they're going to keep interest rates cut. This was during the last FOMC statement, July 29th area, time period. All right. What time is it? 9:42? We might as well stay till PMI now. 18 more minutes. We might as well just watch the PMI. We might as well just wait 15 more minutes and see how the PMI figures are and watch that live here. What's the date today? August 4th? This is... So we have first the market composite PMI at 945 right now. I want to see this be worse than previous. We're going to be focusing on this here. I want to see it be worse than previous, worse than expectations, make the dollar weakness continue. Yeah, I'll show you guys here the US money supply chart. Money supply. This. Let's go here. Put this search bar back. Where is it? One sec. There we go, that's better. So this is a chart of the US money supply, right? You can see that for the last 5-year period from December 2016 till December 2019, the US money supply was roughly staying at 5,000 billion in circulation. And when we had the pandemic and fear of the economic uncertainty, the Federal Reserve increased the money supply exponentially to this price point in circulation. So massive increase in supply of the US money supply in circulation, which equals a decrease in value of the dollar and equals an increase in inflation as well, and an increase in the cost of goods for consumers. I talk about you guys have to watch this webinar if you want to understand more. This one. You have to watch this one. All right, the first set of PMI data was not bad, but we're more focused on the 10 a.m. Eastern one. The first set was not that bad. It was actually better than previous. Nothing crazy though, but still not bad. But that is the more this is the more important one here for me, is the ISM non-manufacturing PMI. This is really pretty much neutral data. The forecast on these market PMIs, even though it's not showing it, is always the prior figure. So the prior monthly figures were 59.7 and 59.8, and this time we got 59.9, 59.9, right? So pretty neutral data with that first set of release there at 9:45. We're going to see the next set at 10 a.m. Eastern before we end the stream, just to see what the economic data releases. And then if this data is worse than prior, worse than forecast, then US dollar will continue to weaken throughout the rest of the New York session. We'll put this away for now. How much drawdown do you hold on gold? Depends what your trading style is. Are you in a gold sell right now or something? What platform are you using for the PMI figures? This is the Reuters Icon terminal. So I have a license with Reuters Icon, which costs like roughly $20,000 a year. And that is how I can also give these news headlines to private members, which is directly connected to this terminal. This news headlines and this news feed that gives headlines up to the minute to the private channel members is directly connected to the terminal. The Twitter feed, which is like free news headlines for all of you guys in the free community, it doesn't post as many headlines as the news terminal, but it still is a great resource there that posts headlines throughout the day. $20K, yeah, for the year. That's how much these data terminals cost. Like Bloomberg terminal costs even more. Reuters Icon, Bloomberg terminal. So you get up to date. You get up to the second news headlines. Like look at this news headline that just came in, right? Economic data reports, everything of that nature. I mainly just use it to look at the economic data reports, political events, and news. So you can see with that first set of PMI data being a bit better, gold just starting to consolidate in range here, but still holding that bullish bias overall for the time being. Investors are just waiting for that next set of ISM news here. All right. The trades called out through the stream were 1820 buys, 1828 buys as well here, and GJ buys from 0.500. We actually might get some further GJ buy scalps in the next hourly candle if we break and retest above 0.800 like we were talking about at the start of the webinar. So we're going to start watching this too over the next 10 minutes. I told you guys that 0.500 high risk buy area. Yeah, GU still slowly chugging away. But that's pretty much it there. Yeah, I'm just going to answer people's questions for the next 10 minutes. We're going to watch that data release, and then we're going to call it a day here, and I'm going to save and upload the webinar. Please make sure you guys re-watch this webinar and do me a favor and send the stream a like. And also, when the webinar is saved after, just comment on the webinar to help with the YouTube algorithm. All right? You guys will see the GJ buys we called from 0.500 and 0.800, the gold buys from 1820 and 1828, and the GU buy scalps above that gray mark zone as well we called out. All right? I'll be back in a second here as well. We're just going to be waiting for this market data release. All right, 5 more minutes till the PMI data release here. GJ gave a quick little 10 pip squeeze above 0.800, eh? Looks like we're going to get a nice hourly candle close here on GJ. If you guys want to look for a retest in the next hour, continuation up. GU still chugging away. Gold still active. Looks like gold just did the little pullback before PMI. And once you have 1 minute closures above 1832, should start to make its way to 36. News move correction plus BOS levels. I don't know what that means. I don't know what a BOS level is. Sorry. Thank you so much for the live stream. No worries. Thank you guys for coming and attending and watching and supporting. I appreciate it. Yeah, ISM news is just in 5 more minutes, so we'll just keep the stream going for 5 more minutes just to watch that data release, and then I'm gonna end it there. You know what I mean? I used to trade oil, but I don't trade it as often now. I still do analysis on oil. It's just been a while, but I've always done analysis on oil, observed it, watched its price movements, because it's a big fundamental pillar, crude oil around the world, and it can teach you a lot too about economics too, supply and demand. Will I go live on Friday? Are you talking about for US NFP and unemployment data? No, I'm not trading this week. I had a lot of personal family stuff going on, and I'm busy tomorrow and Friday as well. I'm gonna be coming back next week. I've never been to the Caribbean. Can I see dollar weakness this week? Yes. If you rewatch this webinar, and if you guys after this go watch this pandemic and central bank timeline analysis, and you rewatch this webinar, it'll teach you everything you need to know about my current view on the markets and bias. All right. The next stream will be next Wednesday, same time. I'm not going to be trading Friday anyways or anything like that. I'm going to be busy. I probably wouldn't be home for the majority of the day after. It depends on your view of order blocks. I just view order blocks as little consolidations of price to continue up with trend that's relevant to the time frame. Like for example, I see this as like a little order block that formed where we didn't break structure, more buyers entered the market, and we had another squeeze to the upside, right? So order blocks are going to be relevant to whatever time frame and style of trading you are playing. But yes, I do. What level should you be expecting retracement? What pair are you talking about on gold? Even if gold does a deeper pullback to these order block highs a bit below the key level to 1826 and comes above 1828, I still see it as bullish. Would you recommend trading on a Friday? Trading any days of the week the market is open is valid, but you should create a trading plan and have rules of when you trade and what days you trade, so you can create discipline of not trading every single day. If you are a scalper, maybe choose 3 days out of the week that you trade and 2 days where you exert discipline and patience and stay out of the markets and sit on your hands regardless what's going on in the markets, right? So like the reality is the market's constantly moving through all sessions. It's always providing trading opportunities. It's how you attack the market. Friday is mainly a range trade. That's not true at all. If Friday was always doing the same thing every Friday and Friday always ranged, I'd be a billionaire because I only trade that range on Friday if that was a guarantee. You guys, it's not realistic the way you guys are thinking about it. Yeah. Yeah. You can't, I don't like people who say, oh, every Wednesday this happens. Every Monday we range. Every Friday this happens. Like, no, it's not true. If that was true, we'd be rich as fuck. Because if that was true and every Friday a specific move happened, and it was a guarantee, we'd be rich. All right, so we got the lower wick retest of 1828. But the data is better than expected, so don't buy gold right now. It looks like we're going to have a pullback from those same highs. It's actually good. So don't touch gold right now. We're just going to have some whipsaw movements, and we could actually have a drop from those same highs on the intraday time frames to the left here. So the data was good, no crazy impulsive impact. Like when I'm looking at the stock market here, no crazy impulsive impact right away for the time being. Gold as well, like I'm just expecting a deeper drop and pullback now. So stay out of gold buys for now as well. And we have some Federal Reserve speakers, fucking Clarida. We have another Federal Reserve speaker. So stay out of gold and dollar pairs for now. Yeah, this was great. Obviously, but we stopped here though. That same price sensitivity area we failed to break, and we just had a bit of stronger PMI data. So we might actually see another sell-off move from these highs again, right? Dollar got a bounce from there. Yen still relatively flat. Market's more optimistic on that. GJ, yo, who took the retest on GJ? Come on, look at these PPLs. Look at these PPL. You're telling me that's not pinpoint on the 1 minute? I said, yo, what did I tell you guys? If we get a little break and retest here. Come on, man. Magic yellow lines. Magic yellow lines. Yeah, see? That's why I told you guys stay out of gold. Because we failed to break those previous highs. And we just had stronger PMI data. GJ played out fine. GU's ranging now just because of the dollar short-term strength. Euro USD we didn't touch. UCAD we didn't touch. US 30 we didn't touch. We just stuck on GJ and gold today. So to summarize, how do you enter that retest? You go to your terminal and press buy. You go to your terminal when it's retesting that area and you say, hey, I got balls here to enter here or here, I'm gonna buy. And you just press buy. That's how you enter on a retest. But pretty much to summarize, through this stream, we called GJ from 0.500, gold buys from 1820, and the scalps from 1828. But now, on gold, we had stronger PMI data and also failed to break those exact same high price points. With the PMI data bringing short-term dollar strength and a bit of market optimism as well, giving us that pullback move from these highs. So pretty much overnight, we called the buys at 1812. Through New York session, we took the buys at 1820. Further buy scalps at 1828. Then the PMI data was rebounded and we stayed out of gold buys expecting this deeper pullback. And you can see exactly where we're reacting to as well, and had the pullback is from those previous highs. GJ, we just called the buys from 151.500 area, which we failed to break and had multiple retests down there. And then either the breakout or the retest above 0.800 or the breakout above 152. So we were in a buyer bias on GJ, just letting the pullbacks happen and looking for those entry points to take buy scalps. That's pretty much it. GU, oh yeah, GU also gave the quick buy scalps, but short-term dollar strength right now just waved that off. All right. All right, everybody, I got to get out of here. Please do me a favor. Make sure you like, subscribe, share the stream around. Make sure you guys read the description. Join the Capital Hungry free Telegram analysis channel. Watch all the videos on the Capital Hungry YouTube. Follow the Capital Hungry news and information financial Twitter. All right. I'll see you guys next time. Zoom chat, private chat. GJ's still going, man. Ripping it now. Gold corrected that move like we were talking about with that Vespucci just said. It just corrected the ADP move because PMI was good. But hey, we got our moves, intraday moves in. And we are happy.